Good day everyone! Welcome to part 2 of our review on working capital management. In part 1, we had the management of working capital in general and our cash. Sabi natin, it should be enough to cover the business operations, yung day-to-day operations ng business. And with our accounts receivable, ang gusto natin mangyari, we should not be too lax nor too strict in granting the credits. Otherwise, kapag too strict tayo, we would be losing sales, or if we are too lax, we might be losing money because there are a lot of bad debts expenses. And in this part 2, we are going to focus on the management of our inventory and current liabilities. So let's start with the management of our inventory. Ang gusto natin mangyari sa inventory natin, there should be enough to support the demand in the market. Gusto rin naman natin mabenta yung inventory natin as quickly as possible without stockouts. So in that way, wala tayong mga lost sales. Ayaw natin ng kulang-kulang ang ating inventory, pero ayaw din naman natin ng sobra-sobra yung inventory natin. Pag sobrang daming inventory, that would cost us so much carrying cost. Ibig sabihin, you need to have a warehouse para i-keep yung inventory natin and so on. Kaya naman, hindi maiwasan that inside the organization, magkakaiba sila ng gustong mangyari pagdating sa inventory levels. For example, ang isang financial manager gusto niya to keep the inventory low, and that would ensure that the firm's money is not being unwisely invested in excess resources. At saka, kapag marami tayong inventory, tulog dun yung pera natin. So that's why si financial manager gusto niya mababa lang yung inventory natin. Pero si marketing manager, iba ang gustong sabihin. Ang gusto niya, mas maraming inventory. Kasi pag mas maraming inventory, mas marami tayong posible na mabenta. So si financial manager gusto niya mababa lang ang inventory, si marketing manager gusto niya maraming inventory. Pero in a manufacturing business, si manufacturing or production manager ang gusto niya sundin yung production plan, because in that way they will be able to come up with the desired amount of finished goods, which is acceptable as to quality and as to cost. Another manager related to inventory management is purchasing manager. Ang focus naman niya is more on the pag-purchase ng raw materials inventories. And now we are going to talk about some common techniques used in inventory management. So the first one is ABC inventory system. Itong ABC is not our activity-based costing. We just call it ABC inventory system because the inventories are grouped into 3. We have group A, B, and C. Ang grouping nito ay depende sa level of importance, which is based on the level of investment sa bawat inventory na yan. So normally, ang group A, nandito yung may pinakamalaking investment ang company. So it is said here na typically this group consists of 20% of the firm's inventory items, pero 80% of its investment in inventory. So basically, ito yung mga pinakamahal nating inventory in an organization. Group B, ito yung sumunod na large na investment in the company or na group ng inventory. And Group C is, ito yung relatively small investment lang ang involved. Okay? So, level of priority or pagdating sa monitoring especially, si Group A will receive more effort, more attention pagdating sa monitoring, and then followed by B and then C. In that way, pag na-classify mo yung inventory natin, kung alin ang mas may priority, mas magbibigay tayo ng so much effort on that, because losing that kind of inventory or having losses na associated dun sa inventory na yan, malaking mawawala din talaga sa pera ng mga may-ari or ng owners ng company. Okay, another system or technique is the just-in-time or JIT or JIT system, wherein the materials arrive at exactly the time they are needed for production. So since materials will arrive kung kailan ka lang magpo-produce, that system would minimize the inventory investment. One possible cost that we can avoid is the storage. Kasi nga, si JIT system is using no or very minimal na safety stock. At yan talaga yung maganda sa JIT system. So maganda man yung objective ng JIT, maganda man yung mangyayari if we are going to use that system. Pero maraming challenges na kasama sa JIT system. Number one is dapat may extensive coordination among the firm's employees. So dapat alam ng mga employees kailan talaga nila gagamitin yung materials na yan so that it could be communicated with the suppliers. At si supplier, dapat kabisado na niya kung kailan to dapat dumating sa company. So, even the shipping companies, dapat may extensive coordination with the other players in JIT system, and that would ensure that materials inputs will arrive on time. So, kapag hindi nag-arrive on time yung materials na yan, so there will be shutdown of production line. Sabi nga natin, magpuproduce tayo and then darating yung materials kung kailan natin kailangan. If we plan to produce right now, tapos hindi dumating yung materials, wala tayong production na mangyayari. That's why, sobrang ganda ng gusto mangyari ng JIT system, pero very critical talaga yung magiging procedures involved in JIT system. And another thing, dapat yung parts or yung materials na manggagaling sa suppliers merong high quality. So meaning, kapag palpak yung parts na yan, so baliwala rin as if hindi dumating yung materials. Kasi kung pangit yung quality niyan, so hindi natin magagamit sa production. Or pag nasira yan, so anong gagamitin natin in our production? So, here are the challenges ng JIT system. Very risky. Pero yung mga companies na nag-adapt ng JIT system, maganda na talaga yung relationship nila with their suppliers and the shipping companies that they work with. Another technique is economic order quantity or EOQ model. This is a technique wherein we're trying to determine the optimal size or optimal order size. When we say optimal order size, ito yung may pinakamaliit na inventory cost. This technique can actually go along with the previous technique that we have mentioned, yung ABC, wherein we group the inventories as to level of priority or level of investment. And this is appropriate sa mga items that are in the groups A and B. So sabi nga natin, once we are able to determine our EOQ, ito na yung size ng order natin na ang ating cost of inventory would be at the minimum. And ang tinutukoy natin na relevant cost of inventory ay ang ordering cost and carrying cost. Pag sinabi natin ordering cost, fixed clerical cost of placing and receiving an inventory order. So, basically, lahat ng cost na may kinalaman from the time we place our order hanggang sa ma-receive natin yung ating inventory ordered. We also have the carrying cost. Yun naman yung mga costs associated with us keeping or holding the inventory. So, meaning, that could include the storage cost and remember, as we keep our inventory, very prone to theft, very prone na masira, could be wastages and losses. Pwede rin maging obsolete yung inventory natin, depende sa kung ano ang nature ng inventory na kinikip natin. So, ang gusto natin mangyari, maging minimum yung ating ordering cost at saka carrying cost. And that can actually be achieved kapag ang ordering cost natin ay equal sa carrying costs. So again, kapag EOQ ang pinag-uusapan, the size of the order or economic order quantity, the ordering costs ay equal sa total carrying costs. And remember, there is also a trade-off between the order cost and the carrying cost. Anong ibig sabihin natin dito? For example, if we try to order more, ibig sabihin the number of orders would be less. So in that case, itong ordering cost natin would be lower. Pero if you order more, meaning you will be keeping or holding more inventory. And in that way, carrying cost would be higher. Baliktarin natin, gusto mo ma-reduce ang carrying cost mo, ang gawin mo, kontian mo yung size ng order mo. And if you do that, yung ordering cost naman ay tataas. Bakit? Because if you want to fulfill yung certain demand for a year, you will be ordering more number of times compared to kapag ginamit natin yung EOQ or compared sa mas maraming size ng order. So in that way, ang ordering cost naman ay tataas kapalit ng pagbaba ng carrying cost. So, ibig sabihin, medyo magkaiba yung effect ng size of order with the ordering cost and carrying cost. Kaya naman, ang pinakamababa or the minimum inventory cost is at the point wherein yung total ordering cost natin ay equal sa annual carrying cost. So how do we compute the EOQ? So EOQ or economic order quantity is the square root of your 2 do over C. 2 do. D is for the annual demand. So please take note, annual demand. Kasi minsan ang given sa exam, monthly yung demand. So you have to multiply it by 12. So kung ang given sa exam ay quarterly, you have to multiply the demand by 4. Kung semi-annual, multiply it by 2. So depende sa given natin. So be careful with that. O is your ordering cost per order. And C is for your carrying cost per unit. And sabi natin, we have the total relevant cost that include, number 1, yung total ordering cost natin. How do we compute for that? Yung transaction cost or yung ating ordering cost, multiply natin with the number of transactions or number of orders. Pero pag pinag-usapan na natin yung annual carrying cost, that is your average inventory, EOQ over 2, times the carrying cost per unit. So for the entire year, that is your cost of or annual carrying cost. And sabi natin, the total relevant cost would be the sum of the two. That is the total cost of your inventory. Again, kapag EOQ pinag-usapan, equal dapat yung dalawa na yan. So minsan sa exam, pag ang tinanong ay total cost of inventory, once you're able to compute for the one here, pwede nang i-multiply mo na lang ng 2 and that is your total cost of inventory. But please take note, it should be at the size of order na na-compute mo sa EOQ. Otherwise, you have to compute separately for the total ordering cost and annual carrying cost. Okay, so let's try to solve some inventory management problems this time. Okay, so let's start with problem number 1. So, the requirements are, we are asked to compute for our EOQ, and then we determine the frequency of order in number of days, and then magkano yung inventory cost or relevant cost associated with that EOQ, and then the reorder point, and your safety stock or what we call buffer. Okay. Okay, so the company had been buying product A in lots of 1,200 units, which represents average supply for 4 months. So here, sabi 4 months. Ibig sabihin, we have to convert into annual demand. Since pang 4 months to, so to convert, we have to multiply 1, 2 by 3. So the annual demand is 3,600. And the cost per unit is 100 pesos. The order cost is 200. The annual inventory carrying cost for 1 unit is 25. We also have the lead time, which is 5 days. What do we mean by lead time? That is the time from the day we place the order until such time na dumating yung order natin. In other words, that is our waiting time. So, 5 days. Order ka ngayon, after 5 days, at saka darating yung ating in-order. Okay? So, we are asked to compute for our EOQ. Remember, the formula would be 2 do over C. So, square root of 2 do over C. Annual demand, ordering cost, and then carrying cost per unit. So, that would be 2 times your annual demand is, we have 1,200. That is for 4 months. Multiply natin ng 3 to make it annual. And then, the ordering cost is, magkano ang ordering cost natin? That is 200. Okay? Over, yung carrying cost natin per unit ay 25. So, we are going to get the square root of that. So, the answer is 240 units. So, ibig sabihin, that is our EOQ or the size of order. So, every time we place the order, the quantity is 240 units. If we are asked as to number of orders, ibig sabihin, ilang beses tayo order. So, that would be, your demand is here, 1,200 times 3 over the number of units, 240 units. So therefore, in a year, we're going to place how many orders? So that would be 15 orders. Okay? And to answer number 2, ito po yung number 1 natin. So to answer number 2, we are asked for the frequency. So that would be, we are going to assume 360 days over the number of orders na 15. So the answer is 24 days. What does it mean? If we are going to place an order now, after 24 days, we are going to order another 240 units. So that is the frequency in terms of days. Number 3, we are asked for the total inventory cost. So as we have mentioned kanina, the total inventory cost consists of your total ordering cost or TOC. And that would be yung number of orders natin, which is, number of orders, 15 orders. Times the cost per order na 200. So the answer is 3,000 pesos. And then what is our annual carrying cost? That is equal to ilan bang inventory natin on the average? The inventory is 240 units, so we will keep that on the average. That is 240 over 2. That is average inventory. The quantity divided by 2. Multiply natin ang carrying cost per unit, which is 25. So the answer is, after calculating that, the answer is also 3,000. We have mentioned a while ago na kapag EOQ yung units na in-order natin, the total ordering cost and annual carrying cost would be equal. So therefore, to answer the question, the total inventory cost is 6,000 pesos. So that's our answer in number 3. We are asked for reorder point in number 4. Ang reorder point natin is our lead time times the daily usage. So ang lead time natin ay ilang days? 5 days. Ano ang daily usage natin? In a year, ang gagamitin natin ay 1,200 times 3 or 3,600 in a year. Divided by the number of days in a year, that is 360. So the answer is 50 units. That is our reorder point. What does it mean? Itong reorder point na to, pag nakita mo sa warehouse mo na 50 units na lang ang nandun, you have to place the order. Ilan ang i-order mo this time? 290 units. Pagsamahin natin yung 240 and 50. Para saan yung reorder point? Remember, lead time is your waiting time na dumating yung inventory natin. So, ibig sabihin, habang naghihintay tayo, kung wala tayong inventory na gagamitin, tulog ang production natin. So habang naghihintay, we are going to keep 50 units para on the average, gumagamit tayo ng 10 per day, 10 units per day. So para hindi natetenga yung production natin. If we do that, magkakaroon ng konting dagdag na inventory. Pero, di baling magkaroon ng konting dagdag na inventory, konting dagdag ng cost. Ang problema kasi natin, if ever merong customer na bumili sa atin o umorder sa atin, hindi natin ma-deliver yung in-order niya because wala tayong materials. So what will happen? The tendency is that customer will go to another supplier at baka maghanap siya ng kapalit na natin. Kaya naman, to ensure na wala tayong magiging lost sales, we are going to keep this reorder point or 50 units while waiting hanggang dumating yung order natin. Again, number of days na naghihintay tayo, ano yung average na daily usage natin. Okay, so that's number 4. Number 5, we are asked for the safety stock. Okay, or SS. Ano ba yung safety stock natin? That is our buffer. Just in case na ang maximum usage natin ay sinabi rito na 14. Ang daily usage kasi natin ay 10. Okay? 10 units ang daily usage. Just in case nag-shoot up ang production natin or production requirement, you will be needing up to 14 units. Kung ganun na nangyari at ang kinip mo lang na inventory is pang 10 units per day, darating yung araw na kakapusin ka talaga ng inventory. Kaya naman, we have to recalculate the reorder point in that way. So lead time times the maximum usage this time. So ang lead time natin is 5, ang maximum usage natin ay 14. Ibig sabihin, we are trying to prepare as if palagi tayong magsushoot up ng production. Kasi in that way, that's the only way na may ensure natin na wala tayong magiging lost sales. So meaning the reorder point is 70 units kung ang maximum usage ay 14. Ang tinatanong ay safety stock or buffer. So the answer is the safety stock is the difference between the reorder point at maximum and the reorder point at the average daily usage. So the answer is 20 units. So that's for number 5. So let us now go to problem number 2. Okay, in problem number 2, ang hinahanap this time is the carrying cost per unit. So, ang carrying cost per unit ay nasa loob ng square root natin. And then we are asked again for total inventory cost and the safety stock if the maximum daily usage is 175. Again, compare natin to sa dalawang reorder points. Yung isa at daily usage, yung isa at maximum usage to get your safety stock. So let's read the problem. So we have here the Negi Corporation. Meron siyang secret ingredient in its production. So this ingredient costs the company 60 pesos each from the supplier. And it requires 6-day na lead time. Okay, 6 days ang lead time natin. And then the demand every quarter, so we have to multiply it by 4, 13,680. The ordering cost is 12.5 or 12.50 per order. So binigay sa atin ngayon yung ating EOQ. Okay, so let's solve this. Okay, so EOQ ang binigay sa atin ngayon which is equal to 1,200. And that is equal to yung square root of our 2 over C. 2 times the demand is, ang demand ay 13,680. Multiply natin ng 4 kasi quarterly yung demand natin. And then multiply natin ng ordering cost and that is 12.50. Divided by the carrying cost per unit na hinahanap po sa problem. So we're going to get the square root of that and that would give us 1,200 na EOQ. So in that way, how do we solve for that? Ang gawin natin, square natin both sides. Okay? So square natin both sides. Ito will give us 1,440,000. And that would be equal to, pakasimplify yun nasa taas, that is equal to 1,368,000. Okay? And over C. Therefore, if we compute for C, ilabas ng C, so the answer would be 0.95. So that is your carrying cost per unit. The second question is the total inventory cost. So number 2, total inventory cost. So ano meron sa total inventory cost? That is your total ordering cost plus your annual carrying cost. Ano uli ang total ordering cost? Number of orders natin. Ilang orders ba ang magaganap dito? So number of orders would be the demand na 13,680 times 4 for the year over your EOQ na 1,200. So, ang lalabas na number of orders ay 45.6 orders. Siyempre, walang 0.6 na order. That's automatically 46 orders. Kaya lang, siyempre, for the purpose of, for exam purposes rather, we just have to use 45.6 orders. Unless sabihan ng examiner na you have to round up or round off yung makukuha nating sagot. But for the meantime, let us just make use of 45.6. So, total ordering cost is the number of orders na 45.6 times the ordering cost which is 12.50. So, anong answer natin dito? So, 45.6 times 12.5, the answer is 570. And syempre, we are expecting, since EOQ yung scenario natin, we are expecting that the annual carrying cost should be equal to 570 as well. But just to check, average inventory is, ano yung quantity natin? 1, 2, EOQ ang ginagamit natin, divided by 2. Times the carrying cost per unit na na-compute natin, which is 0.95, so the answer is also 570. So the total inventory cost is the total of the two. So that will be 1,140 pesos. So that's number 2. Okay, so let's compute for number 3. We're asked for the safety stock. So again, compare natin yung dalawang reorder points natin. Reorder point ng maximum daily usage. So lead time natin ay ilan? 6 days times the maximum usage of 175 units. So ano ang reorder point natin for the first one? So 6 times 175. So that is 1,050 units. Yung reorder point naman natin on the average daily usage, so that would be 6 times, ano yung average daily usage natin? That is your demand na 13,680 times 4 divided by 360 days. So 13,680 divided by 13,680 times 4 divided by 360 days. So the answer is 152. Again, this is our maximum usage. This is our daily usage on the average. So the answer is multiply it by 6. We have 912 na reorder point kapag daily usage. Okay? So our safety stock is the difference of the two. So 1,050 minus 912, 138 units. So that's your safety stock. And that's your answer in number 3. Okay, so let's now move to problem number 3. So here is our problem number 3. We are asked for EOQ again, the reorder point, and then the safety stock. Actually, para-parehas lang naman yung mga tanungan dito. But gusto lang ipakita sa mga problems yung iba't ibang ways para i-state yung mga given natin. So let's go back. So the company is using 150,000 gallons of hydrochloric acid per month. So we have to multiply it by 12 for the annual demand. So the cost of carrying the chemical in inventory is 50 cents per gallon. And the cost of ordering is 150. So the firm is using the chemical at a constant rate throughout the year. And it takes 18 days to receive, so this is our lead time, to receive an order once it is placed. So let's solve for problem number 3. So we are asked for the EOQ. So that is 2 times the demand of 150,000 gallons. But I have to multiply it by 12 times the ordering cost of 150. All over the carrying cost per unit of, or per gallon na 0.50. So let's have the square root of the answer. So what's the answer? Your EOQ is 32,863.35 units. Again, walang 0.35 units yan or walang 0.35 gallon. Pero, what if hindi ito yung pinaka-final na question? At gagamitin mo lang to sa susunod na sa talagang question natin. So, let's just make use of the decimal places. Or if you want, para mas safe, dagdagan mo pa ng decimal places para yung answer natin would be very, very close to the answer of the examiner. But if this is the only question, so the answer could be 32,863 or 32,864, depende po yan sa gustong mangyari ng examiner. Okay, but definitely hindi siya 0.35. Okay, so number 2 is we're asked for the reorder point. So reorder point for number 2. Okay, so that would be your lead time times your daily usage. Ano ba lead time natin? 18 days. So, multiply natin ang daily usage. Your annual usage is 1.5 million times 12, 150,000 times 12 rather, divided by 360 days. Kasi inassume natin na 360 ulit. So, the reorder point is how many? 90,000 gallons. Okay? That's number 2. And for number 3, we're asked for the safety stock. So then again, we have to compute for number 3, the other reorder point wherein the maximum usage is 162 gallons per month. So lead time times the maximum usage. The lead time is 18, pero sabi niya 162 gallons per month. Divide natin ng 30 to get the daily maximum usage. So, the answer is, ang reorder point natin ay, wait lang, so 162 times 18 divided by 30. So, the answer is 97,200 gallons. Reorder point po yan. So, ang safety stock natin is the difference of the reorder point at maximum and reorder point at daily usage. So, the difference is 7,200 gallons. So, that is our buffer or safety stock. Okay. So, we will now proceed to problem number 4. Alright, in problem number 4, EOQ uli ang tinatanong, and then the total relevant cost at EOQ. Ayan. So, the total relevant cost again, that includes your total ordering cost and annual carrying cost. That's another way of asking the total inventory cost. And then number 3 is what are the total relevant costs if the quantity ordered equals 1,000 units. So, most probably, hindi ito yung EOQ natin. So, what if iibahin lang natin yung size ng ating order? So what will happen? So the company produces luggage and bag tag products. So here are the other information. Annual demand. So okay na siya, naka-annual na. And then purchase price. And then ordering cost na 250 numerator. And then carrying cost na 10% of purchase price. So that would be 35 times 10%, 3.5. And carrying cost natin na 4.5. So, yung carrying cost natin ay medyo magko-compute ng konti. So, 3.5 plus 4.5, carrying cost ay 8 pesos per unit. So, let's solve for the 3 requirements here. EOQ, ang tanong sa number 1. So, again, that is your 2 times your demand na 50,000 times your ordering cost na 250. Over yung carrying cost natin na kanina na 10% of purchase price plus 4.5. So that is your 8 pesos ang carrying cost per unit. So we have to get the square root of that. So the answer is 1,767.77 units. Again, if that is the only question, the choice could be 1,768. Okay? But, since gagamitin pa natin sa mga susunod, let us just make use of 1767.77. So, we are asked for the total relevant cost. So, the total relevant cost ay total ordering cost plus or annual carrying cost. Total ordering cost ay ilang orders ba ang meron tayo dito? So, that would be 50,000 over your EOQ na 1767.77. Ilang orders ang meron tayo? So that would be 28.42 orders. So dagdagan muna natin. Okay? So in that way, total ordering cost would be 28.2842 times your ordering cost na 250 per order. So, times 250, 28.2842 times 250. So, the answer is 7,071.05. Okay? And then, your annual carrying cost would be your average inventory na 1767.77 divided by 2. Multiply natin ang carrying cost per unit na 8. So, that would be 7,071.08. So, may konting difference lang due to rounding off. So, the total relevant cost or the total inventory cost ay the sum of the two. So, that would be 14,142.13. So, that is your total relevant cost. Kapag ang size ng order mo ay sinunod mo yung na-compute natin sa EOQ. That is for number 2. Sabi sa number 3, what if ang size ng order is not the EOQ but 1,000 units. So this time, the total ordering cost would be, ilang orders meron tayo? Ang orders natin ay 50,000 units muna na annual demand divided by ilan ng size? 1,000. So therefore, 50 orders ang meron tayo with number 3. So with that, 50 orders times the ordering cost na 250. So ang total ordering cost natin ay 12,500. Ang annual carrying cost natin ay, ano bang size ng order? 1,000 average inventory divided by 2 times the carrying cost per unit na 8. So that would be 4,000 pesos. So the total relevant cost or total inventory cost would be the sum of the two, 16,500. So pag tinignan natin, lalaki lang yung ating total relevant or total inventory cost if we do not follow the EOQ. Ang ginawa natin, binabaan yung orders para bumaba yung carrying cost. From 7,000 naging 4,000. Pero tulad ng napag-usapan natin kanina, there is trade-off between dito sa dalawa na to. Bumaba to pero tsak natataas yung kabila. So, decreasing the size of your order will increase the total ordering cost. Why? Because that would mean more orders. So more orders, more ordering cost. And that is 12,500. Okay? Kaya naman, sabi natin, lumaki to compare dito kasi nga, yung ating EOQ, that is the level or the size of the order wherein the total inventory or total relevant cost ay at the minimum. Okay, so let us proceed with the next problem. Okay, let's talk about problem number 5. Parehas din ang mga questions like the EOQ, the frequency of orders in terms of days, the total inventory cost, your reorder point, dalawang reorder point, isang pag walang sinabi maximum usage, that is at the point ng daily usage, average daily usage. So ito maximum usage natin. And then safety stock, which is the difference of your number 5 and number 4. Now, the problem says that the monthly material requirements, so meaning, multiply natin ng 12 yung 4,050 na units. And then the materials cost 180 per unit for a supplier. And it requires 5 days. Yan yung lead time natin. The ordering cost is 120 per order. And then the carrying cost is 8% of inventory investment. Pag sinabi natin ganon, ibig sabihin, magkano ba yung purchase price natin from supplier? That is 180. So get the 8% of your 180. And that is 14.40 per unit. So, iba lang yung way of expressing the carrying cost this time. So let's solve for EOQ. For your EOQ again, so that would be 2 times the demand, monthly tayo. So we have to multiply it by 12. And then multiply by the cost per order na 120. Divided by the cost per unit na 8% of 180,000, so that is 14.40. So please get the square root of that. Your EOQ is 900 units. Okay? So, that is question number 1. Sabi sa number 2, frequency. Pero alamin muna natin ilang orders in a year. So, number of orders would be yung demand natin for the entire year, kaya multiply by 12, over the 900 units na size ng order natin. So, the answer is 54 orders. So, to answer number 2, yung frequency natin would be 360 days over the number of orders na 54. So, the answer is 6.67 days. Okay, syempre, walang 0.67 days. It could be 7 days. Kung ito na yung pinakahuling tanong natin. Okay, kung gagamitin pa natin sa susunod, leave it as is, 6.67. For the next question, for number 3, we're asked for the total inventory cost. So that would be total ordering cost and your annual carrying cost to get your total inventory cost. Total ordering cost, ilang orders ang meron? 54 times the ordering cost na 120 per order. So magkano po ito? That is 6,480. But since EOQ yung pinag-uusapan natin, it should also be 6,480 yung annual carrying cost. But just to prove, the average inventory is 900 divided by 2. Multiply natin ang carrying cost na 14.4. So the answer is 6,480 as well. So to answer number 3, the answer is 12,960. That is your total ordering cost. Total inventory cost rather. Okay? And then for number 4, we are asked for the reorder point. Number 4, reorder point natin ay lead time. The lead time is 5 days. Multiply natin ang daily usage. So, to get the daily usage, 4,050 times 12 divided by 360. So, your reorder point is 675 units. Okay? That is for number 4. And number 5 is asking for the order point if the maximum usage is 150. So, 5 times 150. Lead time times the maximum usage. So, the answer is 750 units. Okay? And lastly, safety stock again. So, the difference of the two, the safety stock is 75 units. Okay, so that's problem number 5. So let's move to the next problem. Let's talk about problem number 6. And we are asked for annual demand. Oops, nasa loob uli ng square root yung hinahanap natin. So again, ang technique is we just square both sides. So dapat may EOQ, which is 2,400. Frequency, total inventory cost, actually same set of question. Napalitan lang yung annual demand. Napalitan ng annual demand yung EOQ kanina. Okay? So, the company has a secret ingredient. This ingredient costs that the company 60 pesos from the supplier. And then it requires 5-day lead time. So, the ordering cost is 25. The carrying cost is 10% of the purchase price. The purchase price is 60. So, the carrying cost is 6. Okay, so EOQ is 2,400 units. So let's solve for the requirements. So given yung EOQ natin na 2,400. So that is equal to 2 times yung demand na nawawala. Times the ordering cost na 25 pesos per order. Over the carrying cost per unit na 6. That is 10% of 60. So get the square root of that. That will give you 2,400. So, what we're going to do is to square both sides. So, that would give us 5,760,000 is equal to 50D over 6. So, let's compute for your D or annual demand. And that will give us 691,200 units. So, that's question number 1. Number 2 is frequency of order. Alamin muna natin yung number of orders. So how do we get that? The demand is 691, 200 units over the size of your order, which is your EOQ na 2,400. So how many orders are we going to place all throughout the year? That is 288 orders. Okay? So to answer number 2, frequency is equal to 360 days over 288 orders. So the answer is 1.25 days. Okay? So let's go to number 3. The question is the total inventory cost. Again, total ordering cost plus your annual carrying cost. Total ordering cost, ilang orders? 288 times the cost natin per order na 25. Okay? Tapos ang annual carrying cost naman natin ay average inventory. So that would be 24 over 2 times your carrying cost per unit na 6. So what should be the answer? So, the total ordering cost is 7,200 at dapat At talaga naman, yun din si annual carrying cost. So to answer number 3, the total inventory cost ay 14,400 pesos. Okay? So let's proceed with number 4. We are asked for the reorder point again. So the reorder point is the lead time. Ang lead time natin ay ilang days? 5 days. Times the daily usage. So 691, 200 divided by 360. Average daily usage. So the answer is 9,600 units. Okay? What if the maximum usage is 2,000 units? So the reorder point is 5 times 2,000 units. So the answer is 10,000. So therefore, to answer number 6, the safety stock is equal to the difference of the two, 400 units. Yan ang ating buffer. Okay? So that's problem number 6. So we have here problem number 7. We are asked to compute again for EOQ, the number of orders per year, and then just the average inventory. So konti lang yung question. Medyo tricky lang yung problem, so make sure you take note of this. So Virai company makes bicycles. So it produces 800 bicycles per month. So you have to multiply it by 12 to arrive at your annual demand. It buys the tires for bicycles from a supplier at a cost of 20 per tire. So the company's inventory carrying cost is 15% of your cost, or 15% of 20, that is 3 pesos per unit. And the ordering is 50 pesos per order. Take note of this. The annual demand is not 800 times 12. You have to multiply it by 2 kasi tires ang pinag-uusapan ng bicycle. Okay? So let's solve for EOQ. So yung EOQ natin this time is 2 times the annual demand na 800 kasi yung bicycle times 12 in a year times dalawang tires. Okay? Times the ordering cost, ito po yung demand natin, times the ordering cost na, magkano daw ordering cost? 50. Over the carrying cost per unit na 3 pesos or 15% of your 20 pesos. So square root of that will give us 800 units of your tires. Okay? So, dito lang tayo mag-iingat kasi bicycle yung binigay. So, hindi naman lagi sasabihin ko ilang tires in a bicycle or so on. O kaya sasabihin tires in a tricycle. So, depende sa examiner. Pero kung hindi sinabi, so it is automatically assumed na 2 tires for bicycle, 3 tires for tricycle, and so on. Okay? Pero bihira lang naman yung mga ganitong klaseng problem. And then, the number of orders. So, that would be number of orders for number 2. That is 800 times 12 times 2. Ito yung demand natin for tires for the year. And then divided by the EOQ, which is 800. So the number of orders is 24 for the entire year. Okay? So compute the average inventory. So the average inventory is just your EOQ over 2 or 800 over 2. So the answer is 400 units. Okay? So that is your solution for problem number 7. So we are down to last problem under inventory management. So here is your problem number 8. In problem number 8, itong naka-orange yung ating question. We have to determine the number of units of safety stock that will result in the lowest cost. Kumbaga, in a company, gusto natin mag-maintain ng buffer or safety stock. Pero maintaining safety stock, that would mean another cost. Ano ba yung cost associated with maintaining your safety stock? Number 1 is your carrying cost. May dagdag tayo ng carrying cost per unit of safety stock times the number of safety stocks. Kasi we are maintaining more inventory. So there's more cost to carry that inventory. Pero, ang kapalit naman of having the safety stock is yung kabawasan sa stock out cost natin. So there are 2 costs associated here. Stock out cost Dahil minsan, kahit may safety stock pa rin tayo, baka kapos pa rin. So we have your different levels of safety stock from 20, 30, 40, 50 up to 60. So the more safety stocks that we have, the chance of stock out is mas mababa. Okay? Pero the more inventories that we have, yung carrying cost natin would be mataas. So baliktarin natin, less safety stock, you have more stock out cost kasi malaki yung chance na kapusin ka ng inventory, but you have less carrying cost. So we are going to check ano ba mas okay sa atin sa limang levels ng safety stock na given. We have here the probability of running out of safety stock. So kapag 20 units ang kinip natin as buffer, 50% ang chance na mag-run out tayo ng stock. Pero kapag 60 yung safety stock natin, the chance is just 5%. Ibig sabihin, maliit lang ang chance na kapusin tayo ng safety stock. So, let's determine ano ba talaga yung number of units that will result in the lowest cost, because that will be our choice, that the level of inventory or safety stock that we are going to keep. Okay, I just wrote here the units of safety stock in the problem and then the probability of stock out. So sabi natin kanina, ang cost associated with this scenario ay yung ating stock out cost. And yung pangalawang cost ay yung carrying cost. Okay? So, ang stock out cost natin, so meron tayong 80 pesos na stock out cost per occurrence. Tuwing kailan or gaano ba kadalas mangyayari na magkakaroon tayo ng stock out? Depende sa number of orders that we are making. So in our case, we have 5 orders in a year. So 400 pesos yung total stock out cost natin. Now, the probability na mangyari yan kapag may 20 ka na safety stock is just 50%. So therefore, the estimated stock out cost is just 200 pesos. And for your 30 units na safety stock, so 40% lang. So 40% of 400, that is 160 pesos. 25% of this is 100. So 10% is 40. And 5% is 20. Okay? So as you can see, yung stock out cost natin bumababa as we store more safety stock or more buffer. Okay? Ang carrying cost naman natin is kabaligtaran. So, more carrying cost kapag more units. So, kapag 20 units lang ang kinip natin, the carrying cost ang given natin ay, carrying cost per unit ay 4. Okay? 4 ang ating carrying cost per unit. So, 4 times 20 is 80 for 20 units. And then this is 120. 4 times 40 is 160. 4 times 50, 200. And 4 times 60 is 240. So these are the two costs associated with this levels of safety stock. So let's just compute the total cost. Kapag 20 ang safety stock, the total cost is 280. Next is 160 and 120, so parehas lang sila na 280. The next one is 260. 40 plus 200 is 240. And this is 260. And then, the lowest possible cost is at the level ng 50. So, ibig sabihin, we are going to maintain a buffer or safety stock of 50 units. Because that would give us the lowest total cost of your stock out. Okay? So that would be the last problem under inventory management. So if you have a question, again, just email Ryan Canon Roque at yahoo.com. Okay? Let me know your concerns, let me know your problems or questions. Okay, I'll wait for you and for your email. So right now, we are going to proceed with current liabilities or short-term financing management. Okay, quick check lang. So ABC Company has correctly computed its EOQ at 1,000 units. However, the management feels it would rather order in quantities of 800 instead of EOQ. So how should the total annual purchase order cost and the total annual carrying cost for an order quantity of 800 units compared to the respective amounts for an order quantity of 1,000, which is EOQ. So what will happen? Higher purchase order or lower carrying cost? Lower purchase order or higher carrying cost? So is it both higher or is it both lower? So the answer is higher. Why? Again, 1,000 ang EOQ natin, gagawin na lang natin ng 800 units. Ibig sabihin, kung less yung magiging size ng order natin for the entire year to satisfy the annual demand, we have to order more number of times. Okay? If we order more number of times, that would mean higher purchase order cost. But since we will be ordering 800 units, less units, the carrying cost associated with it is lower. So, the answer is really A. Okay, so that ends our discussion with inventory management. Okay, let's now talk about current liabilities management or short-term financing management. Kung yung mga receivables natin, ang gusto natin ay makolekta natin ng mas mabilis, ang mga current liabilities or mga payables naman natin, hanggat madedelay natin, gagawin natin. Okay? But make sure we are careful na hindi natin madadamage yung ating relationship with our supplier or creditor, or hindi natin madadamage yung ating sariling reputation. All we have to do is just to be prudent in making use of the time hanggang sa we pay off ang ating mga obligation. And the first obligation that we are going to talk about are the spontaneous liabilities. So, itong spontaneous liabilities, these arise from the normal course of the business. Otherwise, it's non-spontaneous. So, ang major source ng ating spontaneous liabilities ay accounts payable and your accruals. So, we have the unsecured short-term financing. Pag sinabing unsecured, walang collateral. Because if may collateral, that is secured short-term financing. At ang accounts payable ang ating major source of unsecured short-term financing. Because these result from the transactions in which the merchandise is purchased pero walang formal note signed to show the liability to the seller. Kasi kung meron tayong formal note, it would be notes payable. And tulad ng sabi natin kanina, if we are going to settle our payables, gusto natin hanggat maaari ma-extend natin. And speaking of payment, our average payment period has two parts. Hindi lang siya yung the time na bumili tayo hanggang sa magbayad tayo, meaning the time from the purchase until we mail the check or the payment. It also includes our payment or disbursement flow time. Yun yung time that it will take na mula sa hanggang sa mabawas na sa account natin yung cheque na in-issue natin. And yung credit terms that the firm is offering or the firm is being offered by its suppliers, that enable us to delay our payments for all the purchases. Okay, so the longer the term, the longer the delay of our payment. So, just an example. So, we have for Gem Industries, the operator of a small chain of video stores, purchased 1,000 worth of merchandise on Feb 27. At ang terms ay 210 net 30 end of the month. Okay. So, 210 and 30 ang nakalagay dito. Meaning, we can pay, if we pay within 10 days, we have the discount of 2%. But we can pay up to 30 days. Pero the count of our credit period would start at the end of the month pa, hindi at Feb 27. That is a difference ng kapag may EOM at kapag walang EOM. Pag walang EOM, start ka na agad ng bilang ng credit period mo. Pero pag may EOM, we have to wait until the end of the month at saka ka magi-start. Okay? So meaning, if we pay up to March 10, we can pay 980 pesos only. And that would save us 20 pesos. Instead of 1,000, we will just pay 980. Okay. So let us analyze, what if hindi natin tinake yung discount na yan? There is a cost of giving up a cash discount. That is defined as the implied rate of interest paid to delay payment of an accounts payable for an additional number of days. Para mas maintindihan, let's look at this diagram. Feb 27 binili, credit period begins ng March 1 or after the end of the month. Okay, so 10 days yung discount period. So March 1 to March 10. So we have 980 na payment if we pay within the discount period. Pero kung hindi, we have to pay extra 20 and pay the entire or full amount of 1,000 pesos. The cost of giving up the discount is actually the extra amount that we paid. Kasi we make use of the time. So that is 20 pesos. Kaya naman, if we compute, ano ba yung naging interest rate or cost natin of giving up the discount? That is actually 20 over 980. So, 2.04%. But, take note, the 2.04% is just for the 20 days na period na dinelay natin yung payment. So, ang kapalit ng 20 days na delayed payment is 20 pesos. Okay, so to really compute for the cost of giving up a cash discount, so this is the formula. So, cost of giving up would be your cash discount over 100% minus cash discount. So, if this is 2%, so that would be 2 over 98. Okay? Times, that's 365 days over N. What is N? Okay, so let's take a look. N is the number of days that payment can be delayed by giving up the cash discount. Now, so the cost of giving up the cash discount is 2% over 98%, yung difference ng dalawa, times 365 over 20 days. The term is 210 and 30. So, dinelay lang natin ng 20 days. 30 minus 10. Okay? So, the cost of giving up a cash discount or discount is 37.24%. To make it more simple, may alternative na cost of giving up a cash discount tayo. We call it approximate cost of giving up a cash discount. So, that would be your cash discount times 365 over N. So, same thing, ng cash discount to, ito yung number of days na pwede nating i-delay. Ang nawala lang yung denominator natin na 100% over the cash discount. So, mas simple, so 2% times your 365 over 20. So, 36.5%. So, it is a bit lower as compared to the cost of giving up cash discount. Okay, so that is approximate cost of giving up a cash discount. Alright, so gusto natin kanina na ma-stretch yung accounts payable as much as possible because if we do that, we can maximize the use of our money before we pay off the obligation. And there's a note here that stretching your accounts payable will reduce the implicit cost of giving up a cash discount. So, let's show. So, the approximate cost of giving up the cash discount computed a while ago, yung 210 net 30 EOM is 36.5% or 2 times 365 divided by the 20 days. If, just in case, we stretch the accounts payable na 70 days without damaging its credit rating, the approximate cost of giving up the cash discount becomes 12.2%. So 2% times 365 over 60. Kasi in stretch ng 70 minus 10 na discount period, so that would be 60 na number of days na dinelay. So 12.2%. So meaning, if we stretch the accounts payable, that really reduces the implicit cost of giving up the discount. So, mas madali sa atin na i-give up na lang yung discount. Okay. So, let's take a look at this example. So, we have Carmen Incorporated, a large building supply company, has 4 possible suppliers. So, A, B, C, and D. May kanya-kanya silang credit terms. What we're going to do is to compute for the approximate cost of giving up a cash discount. Approximate. So, simply, 2 times 365 divided by yung ating difference na 20. For letter A, we have 36.5%. Please try for B, C, and D. So, for B, we have 1 times 365 over the difference na 75. So, ang lalabas dyan ay 4.9%. For C, 365 3% times 365 over 50. So, ang answer ay 21.9%. And for supplier D, we have 4% times 365 over 50. The answer is 29.2%. Meaning, ito yung mga terms ng mga supplier, if we give up the cash discount offered by them, ito yung cost sa atin. Ngayon, the company will now decide, will it take the discount or just let go of the discount? So how do we decide for that? Okay? So if the firm needs short-term funds, kasi wala naman siyang cash right now to take the discount. So it will be needing short-term funds which it can borrow from its bank at an interest rate of 13%. And if each of the suppliers ay viewed separately, aling supplier ang i-give up natin yung cash discount, alin yung iti-take natin yung cash discount. Okay, so let's take a look at number 1. Ang cost to give up is 36.5. Pero kung ayaw mo i-give up, mangutang ka. The cost would be 13%. So anong gusto natin? Siyempre yung mas mababang cost. So ang tanong, are we going to take or let go of the discount? The answer is take the discount. Because if you let go, that will cost you 36.5%. If you take, that will cost you only 13%. Okay? How about for letter B? Are we going to let go or take off the discount? The answer is let go of the discount. Because pag hinayaan mo na lang yung discount, that will cost us only 4.9. Pero pag nangutang ka para magbayad lang yan, 13% ang ating magiging cost. Mas costly kapag kumuha pa tayo ng short-term fund to pay for the cash discount. And then, kaya naman, for letter C and letter D, since mas malaki yung cost to give up compared sa rate natin ng short-term fund, we are going to take the discounts. Okay? So, we will let go only for the discount offered by supplier B. Okay, this is just a challenge. For 15 seconds, we are to compute for the cost of giving up discount. Cost, hindi approximate cost. So, for 15 seconds, I'll show the question and you have to compute for the cost of giving up discount for 15 seconds. And your timer starts now. Okay, time's up. So what is the effective annualized cost of foregoing the trade discount on terms of 210 net 80? So the answer is 10.64%. I hope you were able to get it correctly. So that would be 2 divided by 98 times 365 over 70 galing sa 80 minus 10. Okay? So that's 10.64. And just to compute for the approximate cost of giving up, that is 10.43. So, nawala lang yung over 98%. Okay? So, check natin sa exam kung cost ba or approximate cost yung tinatanong. Okay. Oops! This time for 12 seconds na lang kasi alam na natin, mas kabisado na natin gagawin natin. So, I'll show the question and then for 12 seconds, compute. So, dapat sabay tayong matapos or mauna ka. So, here is your question. Time's up. So, what is your answer? Let us reveal the answer. Na ang terms naman ay 215 net 70 or what is the cost of giving up the discount? So, that would be 13.54%. 2 over 98 times 365 over 55, 70 minus 15. Okay? And just to compute for the approximate cost, that is 13.27. Okay, so it's 365 over 55. So 13.27. So again, ang question lang naman dito sa part na to is, aside from computing the cost or approximate cost of giving up the discount, itatanong din, are we going to take or let go of the discount? So again, we are going to compare the interest rate ng short-term financing that we will acquire kapalit ng cost of discount. So, kung mas mababa yung interest rate, we are going to take or let go of the discount. We are going to take because it will cost us more if we let go. Okay. So this time, let's talk about accruals. So these are the liabilities because the services were received for which payment has yet to be made. So, good examples are wages and taxes. So, how do we manage the accruals? Or, in other words, how do we manage the wages and taxes payables? Yung dalawang examples natin. For taxes, hindi natin basta-basta mamamanage yan, or we cannot manipulate yung ating taxes payable because those are payments to government. Pero, as to wages, it can be manipulated to some extent by delaying payment of wages. Wait lang. Delaying payment of wages, hindi ibig sabihin, i-delay mo talaga yung sweldo basta-basta. There is an agreement between the employer and the employees na, halimbawa, ang sweldo nila, if they work from March 1 to 15, ang sweldo nila, yung trabaho nila for that particular period, susweldo nila sa susunod na cut-off would be on the 30th or end of the month. Tapos yung work nila from 16 to end of the month, susweldoin nila the following 15. Kumbaga, yun yung magiging policy nila sa payroll nila. And with that, parang ang company natin is receiving an interest-free loan from employees. Imagine, dahil hindi natin binayaran yung employees natin immediately, para nila tayong pinautang, and we can make use of that money for a specific na period. For example, so Buefano Company, a large janitorial service company, currently pay its employees at the end of each work week. So the weekly payroll totals 400,000. So Buefano could earn 10% annually on invested funds. So, ibig sabihin, kung i-delay natin ng 1 week yung payroll or bibigyan natin after they work for a week, so parang we can make use of the 400,000 for a week for any other form of investment. So, meaning, parang nadagdagan tayo ng 400,000 per year sa ating cash balance. So, that would mean also that this strategy of paying them at the end of each work week would be worth 40,000 per year. So yon, 40,000 per year. So ganun pala ang nangyayari if the companies are delaying yung ating sweldo for a certain week or for a certain cut-off. So they make use of the money to earn in any possible investment. Kung yan ay nasa bangko lang, so kahit papano, that would earn some interest. Or if they put the money in other form of investment, that could earn other amount of money habang nihintay or habang hindi pa natin i-distribute yung ating payroll. Okay, we have here bank loans. Okay, these are short-term self-liquidating loan na these banks can lend unsecured or short-term funds through these three basic ways: through single payment notes, or lines of credit, or revolving credit agreements. So ito yung tatlong pag-uusapan natin in the next slides. Okay, ipakilala lang natin yung bank loan. Ang bank loan natin, meron tayong tinatawag na prime rate of interest, the lowest rate of interest charged by leading banks. Okay, tapos minsan on top of the prime rate, nagsiset na lang yung bangko ng certain percentage. So, it could either use a fixed rate loan wherein a loan with a rate of interest that is determined at set increment above the prime rate and remains unvarying, or in other words, from the term itself, fixed po yung rate natin all throughout hanggang sa mag-mature. Pero kung floating rate loan naman na pinag-uusapan natin, meron tayong varying na interest on top of our prime rate. Again, we have the prime rate. Kapag fixed rate, fixed lang yung dinadagdag natin sa prime rate. Kapag floating, nagva-vary hanggang sa mag-mature yung ating loan. Okay, so remember the computation of your effective annual rate. So starting with our nominal or stated rate, so once we are able to establish that, the method of computing the interest or effective or true annual rate is determined. So remember, yung interest can be paid when a loan matures or in advance. Or in other words, sa end of the term or agad-agad, dinededuct na yung interest natin. So what would be the effect in the computation of her effective annual rate? So, if the interest is paid at maturity, the effective annual rate would be interest over borrowed. Pero kapag nagbayad naman tayo ng in advance, ibig sabihin, that is also known as discount loans, the effective interest rate would be interest over amount borrowed minus interest. Okay? Kasi yung proceeds natin yung nasa ilalim. Yung proceeds natin dito would be reduced by the amount of interest deducted because it is paid in advance. That's why you call it discount loans. For an example, so we have a Rosal company, manufacturer of athletic apparel, wants to borrow 10,000 at a stated annual rate of 10% for 1 year. The interest is paid at maturity. Therefore, ang marireceive ni Rosal nung nag-loan siya ay 10,000. So, ang proceeds natin or denominator is 10,000. So, ang interest natin is 1,000. So, the effective annual rate is therefore 10%. Just the same with your nominal or stated rate. Okay? If the money is borrowed, pero interest is paid in advance, the effective annual rate in this case is 1,000 over 10,000 minus 1,000. Okay, kasi ang proceeds natin ay hindi na buong 10,000 but only 9,000 because interest is paid in advance. So, effectively, ang ating cost would be 1,000 over 9,000. If you will notice, interest or the cost sa numerator, ang denominator natin ay yung laging proceeds. So the rate is 11.11%. Now, let's have an example on single payment note. So the Gordon Manufacturing, a producer of rotary mower blades, recently borrowed 100,000 from each of two banks. So 100,000 kay A and Bank B, 100,000 din. So the loans were incurred on the same day when the prime rate of interest was 6%. So each loan is involved in a 90-day note with interest to be paid at the end of 90 days. So lahat ng interest paid at the maturity. Pero please take note of this. Number 1, for Bank A, interest rate was set at 1.5% above the prime rate. Ibig sabihin, fixed rate loan po tayo kay Bank A. 1.5% for the entire 90 days na period. For Bank B, the set interest rate at 1% above the prime rate on floating rate note. So, initially, at 6%, and then after 30 days, rate will be 6.5%, and after 30 days, rate drops to 6.25%. So, nagbabago or nagpa-fluctuate yung ating rate. Again, ang ating sinet na above the prime rate is 1, pero yung prime rate natin nagbabago, nagpa-fluctuate. So, ang objective natin is to compute for the effective annual rate. Okay? So, for Bank A, ang interest natin ay 7.5% times 90 over 365. 90 days kasi yung period natin. 7.5 kasi 6 na prime rate plus 1.5% on top of the prime rate na 6%. Okay? So, ang interest ay 1,849. And then, ang cost of loan natin for 90 days ay 1.85%. Divide 1,849 by your 100,000 pesos na loan. Again, the proceeds kasi ay 100,000. And then, we have to compute for the effective annual interest rate. The effective annual rate is 1 plus yung ating cost for 90 days raised to the period here. Ang period natin dito ay, since ito ay pang 90 days, ang gawin natin, compute natin, 365 over 90 days. So, how many periods? That is 4.06. Okay, whatever the answer is, minus 1, that is your effective annual rate. Okay? Let's analyze for Bank B. Si Bank B naman, yung interest niya, nag-fluctuate. So, may tatlong scenario tayo. For the first 30 days, 7% lang tayo. Kasi 6% yung prime, 1% on top of prime. So, times 30 over 365. So, 575. We have to compute separately for the next 30 days and for the next 30 days. So, 100 times 7.5 kasi nag-fluctuate. Tapos, ito naman naging 7.25. So, meaning, we have to get the total interest based on the different rates that we have for each of the 30 days. Okay? So, the total interest for 90 days ay 1,787. So, how do we compute for the cost of our loan for 90 days? So, 1,787, i-divide lang natin ng 100,000. That is for 90 days, 1.787%. So, again, to get the effective annual rate, kailangan natin i-annualize to. So, plus, ayan. So, plus 1 plus 0.01787 raised to 4.06. 4.06 again, 365 over 90. So, the answer is 7.46%. That is the effective annual rate. Okay. Okay, so those are the scenarios for single payment note. And this time, let's move to line of credit or credit line. Ano ba yung credit line? This is an agreement between a commercial bank and a business specifying the amount of unsecured short-term borrowing that will be available for the firm over a given period of time. For example, si Bangko, binigyan niya ng 1 million na credit line ang isang company. So, pwede sila hiram ng money up to 1 million for a specific period. So, normally, yung line of credit agreement would specify na mga 1 year. Tapos, yung kanyang interest rate on the line of credit usually ay floating rate. So, meaning, yung prime rate ay nagbabago. So it depends dun sa firms na, yung credit worthiness ng firm na, or ng business. May mga kasamang restrictions at saka may compensating balance. This is the required checking account balance para usually a certain percentage of the amount of credit line. For example, the credit line is 1 million tapos nire-require ng bangko na magkaroon ng compensating balance na 20%. So therefore, pag nanghiram siya ng 1 million, 200,000 may iwan sa bangko, only 800,000 will be the proceeds of the loan. Okay, so let us suppose that this company, BCSign, is a graphic design firm, has borrowed 1 million under the line of credit agreement. So it must pay a stated interest rate of 10% and maintain in its checking account a compensating balance equal to 20% of the amount borrowed, which is 200,000. Again, ang objective natin dito is to compute for the effective interest rate or effective annual rate. Okay, the question is, magkano ba yung interest that we have to pay? The interest is 100,000. That is your 1 million times the 10%. 1 million kasi yung hiniram pa rin natin. But the amount received was only 200,000, 800,000 rather, reduced ng 200,000. So 1 million minus your 200,000. So, the effective annual rate is just your interest over the proceeds. Again, ang denominator natin lagi ay proceeds. So, kahit na anong senaryo yan, magkano ba talaga yung total proceeds that we had? Okay, so effectively, the annual rate is 12.5%, which is higher than 10%. Why? Because we have the compensating balance na dapat iwanan sa checking account natin because of the loan. Meaning, the entire 1 million cannot be used, only the 800,000. Let's take a look at this scenario. So, business sign pa rin ng hiram ng 1 million under the line of credit. It must pay a stated interest rate of 10% and compensating balance of 20%, which is 200,000. Okay, sabi rito, this is important. The firm normally maintains 100,000 balance in its checking account. So, ibig sabihin, meron ng 100,000 na nasa compensating balance ni business sign. Ngayon, kung manghiram siya ng 1 million, 200,000 na dapat niyang maiwan ng compensating balance, it will only require business sign na mag-iwan ng additional 100,000. Therefore, ang ating amount received ay 900,000. 1 million minus yung 100,000 na additional to complete the 200,000 compensating balance. Okay? So the interest is still based on the 1 million amount na borrow. So 10% of that. So effectively, the annual rate is 100 over 900, which is 11.11%. So the only difference of this problem, meron kasing existing na compensating balance si business sign. So dadagdagan na lang niya. Therefore, the proceeds would be higher as compared to the earlier scenario. Okay, additional information, there is what they call annual cleanup. The requirement that for a certain number of days during the year, borrowers under a line of credit carry a zero loan balance. That is, as if the firm owes nothing kay bangko. Okay, so recap. Number 1, single payment note. Number 2, line of credit. And number 3, we have the revolving credit agreement. So what is this revolving credit agreement? The line of credit guaranteed to a borrower by a commercial bank regardless of the scarcity of money. Magkaubusan man ng pera, si bangko will ensure na itong firm na to ay pauutangin niya ng ganitong amount of money. Pero syempre, doing that, meron tayong tinatawag na commitment fee. So dahil meron tayong usapan or agreement na talagang i-guarantee ko that you can borrow the money regardless of the scarcity, you have to pay me or you have to pay the bank a commitment fee. So ano yung commitment fee? That is normally charged on a revolving credit agreement. It only applies sa average unused portion of the borrower's credit line. For example, 2 million ang credit line, pero ang baborrow lang ng organization or ng firm ay 1.5 million. Ibig sabihin, may 500,000 na unused. So you have to pay for the commitment fee dun sa unused portion only. Plus, of course, the interest dun sa talagang hiniram mo na 1.5 million. Okay, let's take a look at this example. So, si MAS company has 2 million revolving credit agreement. So, sinabi ko kanina, the average borrowing under the agreement for the past year was 1.5 million. So, the bank charges a commitment fee of 0.5%. So, mababa lang naman on the average unused balance. So, the term calls for a 7.5% interest rate. So therefore, we have to again determine the effective annual rate. So the formula for effective annual rate, ang numerator natin, magkano ba yung total cost ng loan natin? So aside from interest, another cost would be our commitment fee. Ang denominator natin is magkano ba yung proceeds that we had. So in our case, ang proceeds lang natin dito ay 1.5 million. So let's check. For your interest, it's 112,500. Saan galing yun? Yung 1.5 million times 7.5%. And then, the commitment fee of 2.5. Saan galing? Yung 500,000 na unused times the 0.5% na commitment fee. Okay? So, ang total cost ng loan natin is the sum of the two. So, 115,000. Okay? Ito, hindi naman talaga interest, but just the cost of the revolving credit agreement for the unused balance. Okay? So, magkano proceeds? 1.5 million. Kaya naman, the effective interest rate is 115,000 divided by the proceeds of 1.5 million or 7.67%. Okay? Now, let's talk about commercial paper. This is a form of financing consisting of short-term, unsecured promissory notes issued by firms with high credit standing. So, only large firms of unquestionable financial soundness are able to issue commercial paper. They have high credit standing. And normally, short-term lang siya na 3 to 270 days. Again, a question. Paano natin kukumputin kung magkano or ano ang effective annual rate? So, let's take a look at this example. So, Wu Corporation, a large shipbuilder, has just issued 1 million worth of commercial paper that has a 90-day maturity and sells for 990,000. So, dito pa lang, kita na natin kung magkano yung magiging cost ng commercial paper natin. So, that would be 1 million minus the 990,000. So, the interest is 10,000 pesos. And then, the effective 90-day rate is 1.01%. Paano nakuha? That's 10,000 over the amount of your proceeds. So, palagi naman na ang numerator natin is the total cost of the loan. It could be the interest alone or plus any other additional cost over the proceeds. Normally, proceeds natin is the amount of loan being reduced by certain given, like kung in advance mo interest or kung may other cost na i-deduct tayo. Okay, so the 1.01% was derived when we divided 10,000 by 990,000. So, this is effective 90-day rate. So, let us convert into annual rate. So, again, 1 plus itong rate na to raised to the period. Anong period ang meron tayo? So, that is 365 over 90 minus 1. Okay, so the answer would be 4.16%. So, that is 1 plus 0.0101 to 4.06 minus 1. Okay, so galing 4.06 again, that is 365 over 90. Alright. So, aside from commercial paper, we also have international loans. So, pag international loans, the payments are often made or received in foreign currency. Kaya merong exposure to exchange risk, and normally, the transactions are large and have long maturity dates. One example is what we call letter of credit. So, sabi rito sa letter of credit, this is the letter written by a company's bank. So, galing kay bank to the foreign supplier. So, kumbaga, in behalf of the company, si bank na ang kumakausap kay foreign supplier is stating that the bank guarantees payment. Okay? Guarantees payment of an invoice amount if all the underlying agreements are met. Okay? So, essentially, parang nagsasubstitute ang letter of credit or LOC sa bank's reputation and the creditworthiness of the commercial customer. And sabi rito, an exporter is more willing to sell goods kung ang cover or letter of credit ay issued by a well-known bank in the buyer's home country. So, hindi pwede yung mga hindi kilalang bangko. So, dapat well-known na may magandang reputasyon na bangko ang gagawa ng letter of credit in behalf of the company. Okay. Okay, the next items are actually part of your financial accounting and reporting na review. So, we have the secured sources of short-term loans. Pag sinabi natin secured, merong collateral. and it takes form of an asset. At ang ating collateral na pag-uusapan dito ay accounts receivable or inventory. Okay? And remember, holding collateral can reduce losses if the borrower defaults. Why? Kasi yung collateral na yan, kapag nag-default yung borrower natin, kahit papano, yun yung amount na mare-recover niya. Okay? But please take note na kahit may collateral, there is no indication or no impact on the risk of default. Hindi porket may collateral na, sure na tayo na hindi magde-default yung borrower. It only reduces the risk or the losses. Na kapag nag-default, hindi naman mawawala lahat dun sa nagpahiram. So, since ito ay secured sources of short-term loans, dapat merong security agreement. At ito ay merong terms, at ito ay filed in a public office. And the two commonly used means of obtaining short-term financing, ito yung kilala din natin na pledge and factoring. So pag sinabi natin pledge, we are just making use of your receivable as collateral. Pero kapag factoring naman, we are doing the outright sale of the accounts receivable to a discount to a factor. So yung factor is what we call yung mga financial institutions that specializes in purchasing AR from or accounts receivable from the businesses. So let's talk about pledges. So kapag naka-pledge ang accounts receivable, typically made on either non-notification or notification basis. Pag sinabi mong non-notification, yung borrower pa rin ang nagko-collect. Okay? Pero pag notification, there is a notification sa customer na they can remit the payment directly to the lender. So yun yung difference lang nung dalawa ng non-notification and notification basis. Pero kapag factoring, normally done on notification basis. So pinapaalam talaga or nino-notify si customer that they will pay directly dun sa lender. Kasi nga factoring is the outright sale of your accounts receivable. And there is non-recourse basis. Meaning, yung lender or yung factor na tinatawag natin, they accept all the credit risk on the purchase accounts receivable. So again, yung paggamit ng collateral ng AR, it could be pledge or factoring. Okay? And this time, what if inventory naman yung gagamitin natin as collateral? And in fact, yung inventory is generally second to accounts receivable in desirability as short-term loan collateral. Bakit kaya inventory? Kasi syempre because of its marketability characteristic. Madaling ibenta yung inventory. Pero syempre, hindi naman lahat ng inventory ay talagang madaling ibenta. So depende po 'yan. One restriction is or one note is kapag yung warehouse of perishable items such as fresh fruits. So, yes, marketable ang mga fruits, pero syempre, yung cost of storing and selling the fruits is high. So, baka hindi rin siya maging ganun katanggap-tanggap na maging collateral, yung mga fruits or other perishable na mga items. Also, may mga items na specialized, like the roving vehicles, hindi sila desirable na collateral simply because wala naman tayong mapagbebentahan ng mga items na yan or bibihira yung bibili ng items na yan just in case na mag-default si borrower. So, ang collateral kasi medyo nagkakaroon ng mas mataas na confidence si lender dun sa just in case mag-default si borrower, mayroon siyang mapapala. So, kung wala siyang mapapala on perishable items and some specialized items, these are not desirable as collateral. Ayun. So, those are some theories and problems that we have shared regarding the inventory and current liabilities management. So, thank you so much. I hope that you have learned something from this discussion. And again, if you have a question or clarification, please don't hesitate to contact me through my email address, ryancanonroque@yahoo.com. So I'll be waiting for your messages. Thank you so much, and may God bless you all.